We're good. Go ahead.
Hello, Warriors. Let's have a great week. I'm Dale Pinkard with TradeGATEHub.com, and we are sponsored, powered by TradeView Markets. I want to start off today with the DXY people that were in our main chat on Thursday after the benign CPI or PPI report. I don't know which came first. I went ahead and bought dollars. I was a little early, paid 63 for it. Telling people to take half their profits. Actually said take some right here on Friday. If you haven't, you could still get those levels a little better. It's my view that there could be one more shakeout move in the dollar. And what would shake out bears? What would shake out bears would be to take out initially, I believe there are stops here over 656. And then here, of course, the major stops for dollar bears is going to be at new highs. It's my view. I think we're going to have a bear market rally that's going to shake out a lot of the bears, dollar bears here, and trade over the 107 handle. Of course, I'm wrong. If we start taking out this double bottom, we should get some acceleration. But when you're in a trade and you have, say, 100 pips in the DXY, you have to learn to take partial profits just in case there is no continuation of the move. So this is the broad dollar index looking for rallies and a bit of a short squeeze in the dollar. Bullish sentiment had dropped pretty good to it being pretty neutral at 50% on the DXY. So I'm thinking we could have one more decent rally here in the dollar. Let's break it down in the euro. In the euro, this was very important. I talked about we had to close over 103.50, that this line, which gave us a new 20-year low, was going to be important on the rally. We really didn't have a close above it. It tried, and this is how I would approach it now. You need weekly close over this blue line. So blue line's more like, instead of concrete, like a mattress. I would say, why not just give it the high of the move last week, a weekly close over 103.70. I think you could declare a bottom and would open the door for a big retracement back to about the 109 level. So, if you're just waiting to buy a break and you don't get it, doesn't mean that you're late if you go with the breakout over 103.50. That means that you just waited for confirmation instead of trying to get the edge, which is normally what I do. I think that there's a chance, if I'm right, even if we're bouncing here, that before we get an important low, I think it's very possible that we retrace back under this 101.12 level, which is 61.8, that it's held once before. So there's a lot of stops here. It would take out a lot of the Euro bulls on action under 101, and 78.6 is near par 40. So after they take out these stops, I'm going to be looking for reversal candles at the 78.6 level. Cables, a similar situation. The 120 level held. It's possible that we retest and take out 120.5 without taking out the 120. What's interesting here is on this rally that we're having in the dollar, really a big move in Canada. And I thought that might have been the high at the 29.80 level that we had on a Friday on the jobs number. But just like I think there's going to be a dollar squeeze, to squeeze the bears out, you're going to get a nice squeeze here, especially with crude, helps the cause of a long USD CAD. We've been talking about being bearish crude for $40 already here at TradeView. So very likely that we take out this high. And let me just readjust the fibs here and see what a 61.8 level would be. Close enough for government work. So that would take you to about 130.34. So I'll be watching action up here at 130.34 for potential shorting situations. I don't think the Aussie, which was a strength, should make a new high, but perhaps a new low, excuse me. but perhaps we get some type of pullback again to the 68.40 level on this dollar rally. It's a buying opportunity to me back in this range. Looking at euro pound, I would love to see one more good break down towards 83, which would be the 78.6 level on the euro pound. We'll see if we could get that during this liquidation break, should it manifest in the euro. The euro is weaker than cable today by 10 pips. I want to move over to gold because last week on Wednesday, although we had a little bit more of a push on Thursday, that gold is on its way, in my view, back towards 1740, maybe 1730. I have this trend line break that's going to take it all the way down to 78.6. I'm not expecting that, but that's why I was saying be patient. I think there's going to be an excellent buying opportunity. I am expecting a higher low. We'll see if what fib level it shapes up at, and then you're wrong under 1680, because I'll tell you something. We never took out the 1680 stops here when the gold turned, and 1680 is going to be a pretty good breakdown. I think, it's going to measure maybe down into the 1500 handle, 1560 or so. But I'm not expecting that, but I am always prepared because, in trading, everything can happen, anything can happen. So we have to cover every contingency. So I'll be looking for pullbacks to buy in the gold down here. Maybe I'll start at the 50% level, that's 1744. Similar situation in silver. Silver had a little 3-drive divergence up here, and I'm thinking between halfway back 1948 and maybe all the way back down towards 1920, 1870. I'm going to be looking for fib retracements to buy in the silver as well. Copper as well. Copper led the way Friday, was already trading lower, but I do think copper, although this looks like only a 3-wave advance, that on a nice pullback in copper, we could get another advance. So if you recall, quite some time ago, I was looking for 4,200, and I did attempt a couple shorts there. One, I made a little money. One, I lost a little money. I'm not long, I'm not short, but this action here looks like a 2-drive. But I want to talk a little bit more about what everyone's staring at. That's a 200-day moving average. I do think that we will have some type of pullback in here. I don't think it's going to be as deep. Last week when we were in here, I thought we could pull back to 39.5, 38. Maybe it's only going to be back to 41 or a shade under 40. But the way we set up with a 5-wave structure, this is pretty bullish. And I do think after a pullback, we are going to penetrate the 4,300 level, and then I have some numbers up above the 45 level. I think you have to be open to the fact that perhaps there is new highs. Here's their 200 week coming in right around the same area, 43, 42. That's a 50 week. I like when you have confluence between moving averages, and the 200-day is 43.22. So the 200-day on the daily, 50-week on the weekly, come in a little bit above this 4,300 level. I do think it's going to be taken out, but I do think we need a rest. It's just so strong. I don't think the pullback is going to be the end of this, and that we're going to start heading right to new lows. I think we get a pullback and then we rally again. Looking at the 10-year, which is important, although we're lower, and the bonds and notes really didn't have a great week. I mean, think about it. We had pretty benign inflation on CPI and PPI, and what did the bonds do? They broke. They're trying to bounce today, but the bonds look a little bit heavy to me. Looking at the 10-year, they look heavy. I thought we could rally to 3% before we started heading down. We'll see. So that's why the yen right now for me is a bit of an enigma, but I would go with the same scenario I'm looking for in the dollar. And what would squeeze out the bears? So, a lot of the bears got short up here, after the initial break. Not many people caught the top up here. It was a quiet top, but then we broke down under 36 and bearishness kicked in. We rallied back to almost 136, didn't quite get there. So what would shake out the bears in the end? So if we get that rally in yields back towards 3%, I think and the dollar continues its rally to above the 107 level, perhaps the yen squeezes out and cleans out the bears over 136 and trades up here around 137.40. And just want to clarify, Canada, that I do think that the top is in, and that on this rally here that we're going to see a failing rally, just like in the dollar. So the theme is going into the rest of the week is more dollar strength eventually leading to buying opportunities. Preferred longs would be Aussie and the euro. Preferred short would be USD CAD, and being patient and waiting for fib retracements in the gold and silver, 1740-ish gold, 1920, 1940 silver. S&P due for a rest. Maybe we get a pullback towards 4,000, 4,100, but then looking for the 200-day to be taken out. And I think we could stretch to 4,500. I mean, you get up there, you're not that far away from new all-time highs, are you? You get up to 4,500 here. So this is not done yet. And I'd be a buyer on breaks depending upon what sectors you trade. I would really defer to Mike Venezia for a stock selection. He's here every morning sharing what he's doing, what issues he likes. So, you know, you get a little more bang for the buck being a stock picker in this environment than just an index player. But again, we get a pullback towards 4,000. I think you have to be a buyer for a move over the 200-day, and they'll be uncorking the champagne bottles here, and maybe for good reason. So that's my views. Always know before you get into a trade why you're doing it, because if you don't know the why, then you don't know where you're wrong, because the why is your contingency. If it's negated, you're out. So you know what your risk is. Everything I went through here, I talked about where I would enter, where I would be wrong, and when I'm right, what I'm looking for as far as an objective. And if you don't have a plan with all three bases, you need bases loaded when you're trading. You have to cover all three bases. Why am I getting in? Where am I wrong? First base. If I'm right, what am I looking for? Second base. And third base, booking it. Let's see if there's anything else I want to cover. I think this will set up a nice buying opportunity in some of the miners. They are open now. They're sharply lower with the gold. So GDX is pulling back a little bit here. There's your weekly. Here's your daily. Just like gold, I don't think the miners are going to make a new low. I think they'll put in a higher low, and then we get another rally again. So there are a few really. Yamana's been acting good. It's a buyout candidate. I'm looking at BTG down at this level around 320. The silver juniors I'm looking at, maybe we get back down to 916, a 61.8% retracement, expecting a higher low here. And energy stocks, people keep trying to bottom pick WTI, and you get the trades, but China and the zero COVID policy spooked the crude again, and I am starting to see a little bit of some divergence developing. See here, we're at new lows. Here's a 4-hour. We're at new lows. I still see no reason to be aggressively long WTI. I still think it's a sell the rally mode. And you could go back a week from Tuesday when Mike and I were talking about crude, and we were talking about 85 to 80 for a target. And here you go, manifesting live on our screens today. I invite everyone to join us in our main in our main trading room, chat room at TradeGATEHub.com. Invite you also to open a demo at TradeView Markets. Check it out. See if you like their platform, their spreads, and also the multiple instruments that you could trade on one platform. So good hunting this week. Keep in mind it's vacation time, which means volumes are thinner. There's more volatility, and let your stops breathe because the algos will be going for them. So don't just count your trades and your pips, count your blessings. I'll see everyone tomorrow. I'll be here with Mike for our Tuesday market talk, and Mike will be with you in an hour and 16 minutes to go over what he posted earlier this morning before the opening and how he's handling this. I know Mike was looking for a little rest or consolidation in the market as well. Thank you. If you like what we're doing, hit the like button. Could always leave comments. I answer them, and spread the word. This is free. You come in here and collaborate. People that have come in here have been contributing. We're attracting some pretty good traders. Why don't you join us? Because there's an expression that iron sharpens iron, and you rise to the company you're keeping. Have a great trading day, everyone. This is Dale Pinkert saying adios. See you tomorrow with Mike.